So welcome everybody to our first panel. I'm still here. It's called Mexico, Opportunities Across the Border. I want to welcome these four gentlemen up. You're in for a great panel, I can tell you that. I've gotten a lot of compliments on the group that we've assembled here today. And what we've really tried to do is get people together who are really getting things done in the market, not just talking about what they'd like to do, but who have really kind of accomplished some things over the last year. The two kind of big themes that we've been thinking about at GTM is that as the market continues to grow and continues to develop, what strategies are scalable, what opportunities were just kind of one-off, and what can we do to really take the market to the next level. So with that, I was kind of hoping that we'll start with you, Alejo, and if you could just introduce yourself and your company, and also talk about, by this time next year, what do you think will be the big thing that we're talking about with Mexico?
So I'm Alejo Lopez with Hanwha Q.Cells. I lead all the development in Mexico. And Hanwha Q.Cells is one of the largest module and cell manufacturers, and also a developer and project financier. So very active in Latin America and in Mexico. To your question, I think my expectation would be that we would have an energy reform that would be very, very supportive of renewables, as everybody expects, with clear rules in terms of how tariffs are created, how projects supply to different customers and markets, and with a more mature financing and equity market that support further growth, particularly on the most competitive large users type of off-takers.
Mm-hmm. Mm-hmm. Great. Rob?
Yes, okay. You did a great job on the intro, by the way, Adam. I enjoyed that. My name's Rob Powell. I am the chairman CEO of Envolta. We're essentially a solar leasing company. We provide solar as a service to residential and small commercial businesses in Mexico. And I guess when you try to look forward a year, one of the things that we're very focused on is trying to unlock that bottom of the pyramid, if you will, those 20 some odd million ratepayers who are paying that 6 to 7 cents per kilowatt hour that you referenced. And I think over the course of the next 12 months, we'll see some financial innovations that will lead to a lot of those customers that currently just aren't attractive or the economics don't work. I think you'll see a lot of those come online. And we can talk more about how that might happen, but yeah, that's we'll see in a year.
Mm-hmm. Great.
Yes. I'm Alvaro del Rio. I come from Martifer Solar. I'm the country manager in Mexico, and we are an EPC contractor, a developer, and we also operate and maintain the power plants that we build. I think that Mexico is the most promising market. It's a 120 million population. They have a big energy needs and a very old energy infrastructure. And I think that the new energy reform will bring, for sure, very good things for the solar PV sector in Mexico.
Mm-hmm. Okay. Edgar?
Hi, good morning, everyone. My name is Edgar Arvizu, and Adam, thanks for having us here. Great presentation this morning. We are certainly very interested in Latin America. We have a big presence there. I'm with a company called Gestamp Solar. We're a Spanish-based company with a global footprint. We're in 27 countries. On the solar side, we are in 10 countries. We have 600 megawatts in operation. I cover North America, Canada, US, and Mexico. And in Mexico, we're really looking at it as a long-term market. We're looking 10 years out and working backwards. We have a long-term play there. And we're focused in developing projects and selling energy to businesses, governments, and utilities. And I think since 2012 until now, we're going through a digestion phase. In 2012, Mexico implemented a climate change policy that was pretty tremendous for the country to be conscious about the climate. And just this past year, 2013, we have a game-changing energy reform that is paralleled with fiscal reform and 3 other reforms with the new government that stepped back in. This is a PRI after the PAN party. So we are going through a game-changing phase in Mexico that is opening up the energy sector. We're talking oil and we're talking generation. And next year, going to your question, I think there'll be a lot of lessons learned. There are pioneer projects that are happening right now, like the project that Martifer worked on and the project that Hanwha Q.Cells was working on. There's a lot of learnings that are going on from the financing phase, from the construction phase. There's a lot of suppliers in the room that sell panels, inverters, and that are partners to a lot of developers, and there's also a lot of developers and financiers. And so there's so much to digest right now. Secondary laws are going to come out this year, and the implementation is going to be all laid out this year. So this is the time to look at this market and execute in the next 2 years, particularly as if you're a North America-focused developer where ITC is sort of winding down in the US and you're looking for frontier markets. Mexico, Central America, and South America are tremendous opportunities. Now, we'll get into what it's like to do business there. A lot of us go on vacation in Mexico, but don't do business in Mexico. And doing business in Mexico is very unique. And we can get into that in a little bit. But thanks for having us.
Yeah, thank you. And yeah, so that on that note of kind of the unique characteristics of doing business in Mexico, Alvaro, I wanted to start with you. Your company developed one of the largest projects to date in Mexico, the 39 megawatt hour project, which was, some people think, a very unique project. And I was wondering if you could talk to both the challenges that you ran into developing something of that scale in Mexico, but then also to whether or not you think that that strategy and what you all succeeded with there is replicable elsewhere, and kind of, if so, why, and if not, why?
Well, I think that it's true that Aura Solar is a unique project, but I think it's a model for the future because it's one of the first merchant solar PV power plants in the world. I think the future for PV is to fight in the daily energy market of energy, in the spot market. So I think that Aura works that way, but it's also true that it's unique since the energy prices in Baja California. The project is located in La Paz, southern Baja California, are really high. And the insolation, as you said, is also very high. So I think the SIM should be replicable to another parts of Mexico. It's true that lately the node price dropped a little, but I think that there's an explanation. I think that it's because of the special year of big rains in Mexico. The hydro in Chiapas and Oaxaca worked plenty of the year. And yes, I think that there's a future there with the same model of Aura Solar for the future. And the project ran very well. We connected it in September. I think one challenge, important, I think we gave little education to the utility, to CFE, because it wasn't so easy. La Paz is a very little city in Mexico, and the project is very big. Mm-hmm. It's about 65%, 64% of the total consumption in the city, the power plant. So it's the utility were a little afraid of how does this kind of technology works. But we are working with them every day, with the operator of the electrical system, and I think now they are happy with the technology, and for sure this energy reform will bring good things for all of us.
Mm-hmm. And for a developer, for an EPC who's just starting to enter the Mexican market, how much of a learning curve is there for working with CFE? I mean, do you all feel like you benefit from having a local presence? Is it possible to just come into the market and kind of just build a project? How streamlined is it to work with the utility?
I didn't understand, sorry.
How easy is it easy to work with the utility if you're a foreign company coming into the market, or is it better to be a domestic company?
Well, CFE, it's a complicated company since it's the only utility in Mexico and it's public. But there's a rule of law, and they are, at the end, they are serious people, and I encourage all of you to come to Mexico because it's possible to make deals with these people.
Mm-hmm.
Yeah, I would add a couple of comments there, Adam. I think, you know, for us, for Envolta, focused on distributed generation in the residential and small commercial space, we deal with a lot of different CFE offices. And I agree with you that they're a very professional organization and, you know, at the top level. But there are a lot of inconsistencies in regional, regional offices of CFE. So, you know, there's a learning curve there for sure. But I would say by comparison, it's a lot easier to deal with in the States, where you have, you know, thousands of utilities and lots of different local regulations and offices to deal with. So it's very approachable, I would say.
What we need is a regulation, a solar PV regulation, and so that the utility can do a good interpretation of the law. That could be much better. But it wasn't very, very hard to deal with the local utility from our point of view.
And I guess, Edgar, I kind of a similar question for you. I mean, if you're looking at developing a real pipeline across Mexico, do you think it's better to go and kind of aggregate a lot of these one-off projects that have really unique sets of circumstances? Can you actually develop a pipeline that way, or is there a cookie-cutter strategy to developing projects in Mexico that a company could come in with and make an impression?
Ooh, that's a good question as a developer. I think a little bit of what's going on right now, everyone's playing roulette. You know, they're putting chips all over the board and seeing where the ball sort of lands because there's been so much uncertainty. With a lot of insider information, you know where the ball was going to land, so you can make that bet. So certain projects have gotten done because there has been a lot of good information. So it's access to information in Mexico, which is the key. You know, sort of relating it to the previous question, CFE is a sort of monopoly, oligopoly, that very entrenched, run by a union. So it moves very slow, and it does what it wants, and it's a very powerful entity that is now going through transformation unlike ever before. I mean, if you look at the balance sheet, most of its debt is to the unions, and CFE is operating at a loss, billions of dollars in losses, and it needs to double its grid in the next 6 years. So, I mean, as a developer, that's a very unique circumstance if you look at global markets, energy markets. I mean, a country that is stable, that has talent, that has load growth, that has a very young population, half of the country is under 25, and it needs to double its grid. I mean, just think about that, and it has no money to do it, so it's looking for foreign investment. So all that relates to how you sort of develop your strategy on how to develop a real pipeline. It's about access to information. It's about knowing how to work with these entities, understanding the personalities, the culture of how these entities work to really have the right strategy. Now, there are legacy laws from the 90s, 92, 95, that permitted the private sector to go into generation. And now, actually, with the reform, there's a cap on how much can be done by hydrocarbons, by gas or coal. It's going to be up to 65%. The rest is open to clean energy and all that. Now, they grandfathered a lot of hydro into it, but in bad rain years or whatever could happen, that could kind of erode it. The other is now it kind of went unseen, but Mexico in the energy reform now has a tax on carbon. This is huge. How it will play and through the implementation of all this, they're putting in, Costa Rica has a similar thing. I think it's called Costa Rica 2. In Mexico, it's going to be called Mexico 2, and it's this trading market where if you have a dirty project, you can go and buy credit so you can offset sort of your penalties and not get penalized by the fiscal entity there. So all these little elements that I'm speaking to really play into how you go into developing projects. But if you have these tools and this access to information, you can really develop a pipeline. We've made investments already. We are opening up an office. We opened it last year. We're actually growing the team. We're hiring 10 people in the next few months. And we have, multi-100 megawatt pipeline right now. How much of that will come to fruition, we don't know yet. But, we are playing with what we understand in certain states that are key. And you need to be very local in certain states, I'm from Mexico, so I'm from the north, so I understand the north very well, but I understand that the central part and the southern part are very different. So you have to know how to play in these different areas. Kind of like the US, there's sort of the right bottom is red and the left is all blue, right? So you kind of have to understand these personalities of the country as well. And it's a massive, massive country with a lot of talent, a lot of potential, and it's really good timing right now.
Mm-hmm. And they have the objective of 35% by 2024, 35% of renewables. Mm-hmm. So I think in a country with 120 million of population, there's a place for every technology.
So, I would add to that, in terms of, what's the best strategy for, creating a pipeline in Mexico right now. I think you got to be clear on what would you like to do versus what maybe you should do given, the changes that are impending in terms of legislation. We've seen a lot of companies with portfolios of, small producer projects or merchant projects that are seeing, that those portfolios might be worth a lot less than they thought, just because the legislation might create a wholesale power market that might be a much better avenue to develop that type of project than do it under the very stringent regulations that the small producer model has. So I think, you got to know your strength and what you're good at, and I think that's always going to help you succeed. But also, I think having a diversified portfolio of kind of straight commercial industrial PPAs versus maybe some of these other so sort of merchant projects might be a good way to hedge your bets a little bit.
So can you speak to kind of the first category there, like on the distributed side, and maybe whether it's the self-supply model or the residential and commercial market, and then I have a similar question for you, Rob. What does it look like to, is there, because it seems like right now it still is kind of a lot of the one-off commercial projects, the one-off residential projects. What do you need to actually create a scalable strategy in distributed generation, and what are some of the challenges there? Are there, when it comes to off-takers, financing, what are some of the things that you've seen?
So I think in your presentation, in one of your slides, I think you pointed to some factors that I think are spot on. Particularly, you mentioned willing off-takers, right? And there's a significant amount of willing off-takers, right? Off-takers willing to purchase renewable power, and they're doing. The problem is that they've been buying wind mostly. Wind competes head-to-head with commercial and industrial customers. Any customer can buy any kind of power they want, and given that you have regions like southern Mexico and Oaxaca, namely, with very high wind capacity factors, the pricing you're getting for those wind projects is fantastic and is unbeatable for solar projects. Thank God that region is sort of tapped out, and now the development of wind power is moving to other more normal in terms of capacity factors. So we're seeing that solar, and if it's well developed, well placed, and well priced, it is competitive. I think the other factor that you also mentioned that is critical for creating this market, especially in the large industrial, which is where you're going to have investment grade off-takers, with very large and growing power needs, well established. You need the right cost of capital, and I think that's a little bit of a sign of how immature the market is right now. There's a pretty healthy debt market that is absolutely willing to finance these projects, both mostly on the development bank end, but for commercial projects, there's definitely a set of large commercial banks in Mexico that are interested, and they're doing it with wind projects. So I think that's definitely a very clear avenue for financing solar projects. I think the equity component is where, a well-priced equity, an investor that understands, the risk profile of a solar project, understands Mexico, and is willing to invest at a rate that supports, that type of project. I think that's where we're going to see that kind of hockey stick of, tons of other projects, being able to, be deployed.
Yeah, and I know I wouldn't be selling any company secrets because you all have announced this project, but so you're doing this project with Soriana where you have 31 megawatts and you've signed a single PPA, and then there's a lot of different projects scattered throughout the country. What do you think are the advantages? I mean, how does that model hedge against those risks that you're talking about? And do you think that's something that other companies could move into the market and do?
Absolutely, absolutely. I think it's a great project. I mean, it's distributed generation. It's 31 megawatts of rooftops. I think, Edgar was talking about, and Alvaro about the hurdles of dealing with CFE. All these rooftops are below 500 kW, so we don't have to deal with the regulatory agencies or with CFE. So it's everything behind the meter, very simple, cookie cutter, totally a private contract. So it is exciting. I think the main challenges are, finding the right and willing off-taker and having the right, stack of costs, both on the EPC side and cost of capital. Mm-hmm. So that's I think where, other than that, I mean, Mexico is a fantastic place to do business. I mean, Mexicans are great getting things done and simplifying things, sometimes a little bit oversimplifying, so you got to be careful there a little bit. But on, on that regard, I mean, they really can do, things very quick when they see, the value. So I think that's very promising.
And Rob, so I mean, I guess I have a question in a similar vein for you, which is that, so what's unique about what you all are doing is you're offering these financing options, you're offering these leasing options, but as we've talked about, there's that kind of 500,000 customers who pays very, very high rates and who you can see how the project economics pencil out. And then there's the vast majority of people who at 6 to 7 cents a kilowatt hour, it's tough to see how you can really tap into that market. Does financing actually, is that a way to actually scale the distributed market for you, or is that a way just to tap into that 500,000 people better and to give them more options?
Well, I think that in a lot of ways the market is sort of coming to us. Solar economics are improving because equipment prices are going down, electricity rates are going up in Mexico. And, there is this sort of interpretation of the energy reform that prices could possibly fall in the market. And, I'm skeptical about that. We'll wait and see. But a lot of the professionals I speak to that mainly represent large private companies tend to agree that prices should continue to rise, at least retail rates. So, I think what the DAC customers, that 500,000 high consumption tariff customer, that sort of bridges the gap. One of the problems with scaling our business in Mexico is the lack of equity financing. I think you were touching on that, Alejo. So at any rate, what we're doing is funding projects with 100% equity. Mm-hmm. And I think, that is not a long-term strategy, but I think that will also help us get through this period of transition until the broader residential market becomes more economical for solar.
So do you need lower cost capital, or do technology costs need to really fall? I guess I'm just thinking, at 6 to 7 cents a kilowatt hour, like, how do you actually make the solar value proposition worth it to those customers?
Well, that's something we're working very hard on, and we're not there yet. Economics just are not attractive for most residential customers in Mexico. But, there's a heavy subsidy in residential tariffs in Mexico as well. And if you want to just ballpark it, it's about 35% of your average bill each month or every 2 months is paid directly by the government. And, because CFE is losing money at the rate they are, because of the energy reform and the restructuring that's going on, you have to believe that they're going to try to get their financial house in order. And that means they're going to continue to remove those subsidies. So that's going to be a big factor that helps. That's because if you take an unsubsidized residential customer, they're right on the line, and they're almost there. And so I think one of the things that we're focused on in terms of innovating our financial products around that bottom of the pyramid is really empowering people to do some of the installation and deployment themselves, and sort of pare back the more robust service model that we have, which provides insurance, a power guarantee, and so on and so forth. Pair that back to a more streamlined, simplified solution that can be deployable to lots and lots of rooftops at, say, less than a kilowatt, because that's about the amount of power that most of these homes need. So, yeah, I mean, I think over the next 12 months or so, we'll see some good progress to that end, for sure.
And you mentioned the commercial market there, and I guess one way to tap the commercial market, other than the strategy that both of you are taking, would be the self-supply model, which I think is kind of worth mentioning. You can build one large project in a very high insulation area and then wheel the power to multiple off-takers throughout the country to consume in a different place and offset their retail rates, which is it's an interesting idea. It hasn't yet really been done, but I mean, Alvaro, maybe you can speak to, do you think that model, you can actually tap into the commercial market that way? What are some of the challenges with kind of that self-supply model?
I think in Mexico there are 37 different tariffs.
Right.
There are people or industrial consumers who's paying about 25 cents. I think we should go to make business with them because make business with the people who's paying 76 cents is pretty difficult. What we need is regulation in that project, I think. I think it's complicated, for example, that the off-taker must be a shareholder of the SPV. That's not very easy to explain to your customer sometimes.
Right.
People understand, but there are lots that do not. And I don't think it's a problem of money. Mexico, I think, are many private equity investors, or many banks and international financial institutions that consider that the country is a good place to invest. It's a different project, but for example, we in Aura we introduced the IFC for the debt, and NAFIN, which is Mexican Development Bank, I think the thing is to find the regulation. Mm-hmm. And other thing that it's important to talk about in the self-supply is also the municipalities that also could be there. Mm-hmm. There's a project, it's Sonora 80, who is selling the energy try to sell energy to municipalities. It's tough with solar, but there's also a wind project in Nuevo León who, with the same SIM and with a local commercial bank, build the project. So there's also a place there.
I would also jump in here and just from my point of view, the real simple problem that we're dealing with on the commercial side is demand charges. And from 7 p.m. to 10 p.m., you've got peak demand that is charged at a fixed rate per kilowatt in Mexico, and that accounts for a third to sometimes as much as 50% of a customer's final bill. So the most common commercial tariffs range from about $1.45 at the OM tariff down to about $1.25 for the HS tariff. Those are medium and high tension tariffs.
I think it's also, I agree with Rob, but I think it's also about business models to support that particular commercial segment. I mean, you're talking about system up to 25 kilowatts. So in effect, in Mexico, you can actually go and have a 20 megawatt plant in the right location, where maybe 3 megawatts are going to a mom and pop shop with 100 locations around the country, mm-hmm. Which is it's fantastic, right? You can do that. But you run into, the typical problem of how do you get that project finance? What is the credit of that off-taker? And, who is willing to, put the money behind that project? So even though those rates are very attractive, particularly the OM tariff, they are challenging to get done. And you have to do it, by aggregation, and there's other complexities, involved into that. I mean, I think on the upside on the tariff, I think that the reform should address, to some extent, the demand charges, and which I think it will be, an absolute win for PV, and I think that would put it probably on par with wind. And until that happens, I agree, is very difficult. It's sort of, not marginal, because I mean we're seeing it with the Soriana project that it works, but it's very challenging. I think the good thing in Mexico is that soft costs are much lower than the U.S. Right? You don't have any tax equity, which is fantastic. And basically, if you have the right project, it's a typical project finance, infrastructure financing, which is very cookie cutter in that point. You know how much it costs, and so it's very simple, and there's not a lot of red tape at that point. So to me, I mean, EPC cost, we're seeing some advantages on having local labor. On the downside of that is like you don't have a lot of well-trained crews. I mean, Alvaro, might be, better to speak to that, but it will get there. Also, there's some leeway on, what tier 1 products are, not on the module side, but mostly on racking, on different components where, you can use, suppliers that are, well-known in Mexico and that are acceptable to a bank that perhaps, in the United States, this just wouldn't work. So, there's ways of optimizing your EPC costs by taking advantage of some, local, suppliers and whatnot. To me, a lot, and having gone through the full circle of developing, closing the PPA, building the first phase of the project, and being out in the market to get the financing, to me, the critical risk, and this is a huge opportunity for some of you that might be, looking at investing in projects in Mexico, is a well-priced equity. There's a lot of private equity in Mexico. There's tons of money in Mexico right now. There's a lot of liquidity, but they are seeing a lot of other avenues where they can make a lot more return than solar. And I think one reason is because they have those options, and B, they don't really understand solar. I mean, they don't. Right. I mean, I don't think the risk adjustment of the solar sort of bond annuity is being fully understood by them yet.
Yeah, and I guess on this kind of note of financing a lot of these projects, one of the questions I had for you, Edgar, was just when you're looking ahead at the market, one of the things I talked about in the presentation is that it's mostly been development banks up to this point, and there's kind of been this gap, but it seems like there's the potential for more commercial or private lending. What do you think, to what extent is there already an appetite for private money to start coming into the Mexican market, or what do you think needs to, if there's not, what needs to change to get it there?
That's a good question. So there's a huge learning curve going on right now, both on the debt, on the equity side, and Alvaro just touched on the equity piece. And relating it to the previous question, you go sit down with a customer. By the way, the modality you just talked about is actually quite amazing. If you're a developer, you can go strategically put your site the most optimal place, let's say Imperial Valley in California, and go sell the energy to any buyer in California with a fixed wheeling. I mean, it's for a developer, it's a very compelling way to develop. But it hasn't taken off because, the reasons you just mentioned, the demand charge issue and the financing costs and all that, you just can't get to the tariff rates. But when you go sit down with customers, they don't necessarily believe in PV. You get questions like, well, in 2 years, there's going to be a better panel. Can you replace it in 2 years? Or a cheaper one. And can I get the benefit of the upside? Can you give me a lower price? And they want that contractually. I mean, we're not used to that in the US, right? I mean, we're used to PV since the 70s. And it's not even a question. But in Mexico, you get these questions about the technology curve. You get these questions. Well, analogous to that, financiers don't really trust the technology a little bit. And we were talking about it before that. They even believe in wind more, even though wind is less predictable than solar. And in solar, they're still being very conservative. So they're not moving on the rates. You know, in the U.S., on a levered equity return, you're in the single digits, mid-single, low digits nowadays, especially if you're talking yield codes and all that. But just speaking on the equity side, whereas in Mexico, it's still in the mid-double digits. You know, they want the same return as a conventional infrastructure project. But there's a learning curve that's happening. You know, these pioneer projects are really teaching the market a lot, and it's opening up. You know, they want to see real project. They want to see a real sponsor behind it, and that really attracts. You know, you will end up with 6 to 10 term sheets on the table. You know, for debt, they're willing to play. For equity, it's still not quite there. In fact, you know, if you could do the centralized solar and go to a bunch of commercial clients and say, I'll sell you X megawatts and you can claim you're buying X% in renewables, you can't quite get there. Part, you know, the demand charge thing, which is being changed, but also because of the financing cost, the overall financing cost. So one thing you're going to see, maybe not this year, but in the second half of this year, and certainly 2015, 2016, you will see them go through this learning curve, get more comfortable as more projects and more volume, and they compete for more deals. Because right now, you know, there's one deal and there's a few banks, and a lot of them are kind of sitting back. They're doing the wind projects, which are getting closed. You know, there was 4 or 5 announcements last year of very big wind projects, Soriana as well, and Volkswagen, and a couple of municipalities and all that. But in 2015 and all that, you're definitely going to see these commercial banks come in and play. We're seeing it, we have projects in Peru and in Chile. We've seen sort of the similar learning curve. Now we're actually working with some of the commercial banks. Now, you get into sort of details, the FX risk and all this, that you have to kind of sort through and really look at what the real cost of your development bank equity or financing and your commercial bank financing is.
So to add to that, I would say that right now, I mean, all the development banks in Mexico have a mandate to invest in renewables, and they're absolutely interested. So if you have a project in Mexico, take it to, you know, Bancomex, NAFIN, you know, DEG. All those banks will be interested in looking at your project, and they're willing to take more risk right now. And that mostly goes for, right, the merchant project. So they're absolutely willing to look at that. Now, right, it has to make sense, you know, from the economics point of view, but they're very creative in terms of structures to make those projects work, like they did on, you know, on the ARTA project and other project. Now, on the, you know, the commercial banks, what we've seen is that if you have a very strong PPA with a you know, a strong off-taker behind it, the commercial banks are absolutely, you know, willing to finance that project with, you know, I would say very good terms. But those banks are not willing at this point to look at the merchant projects at all. I mean, I think, you know, like Edgar said, they will take more time. If that, you know, small producer market still exists, but B, they need to understand, you know, how the economics are going to work out before they invest in that. But you know, I think it's definitely a learning curve. I mean, we've going through, you know, a lot of, you know, education issues with them in terms of, I mean, they're extremely familiar with wind. There's about 1.5 gigawatt of wind operating in Mexico right now. So most of these banks are very sophisticated and understand that very, very, very well. They do still perceive a little bit more risk in solar than they do in wind, which I think is a huge opportunity, because they'll understand very quickly that there's a less operating risk and more predictability in solar than in wind, and I think that will you know, result in better terms on the debt side. But I think it's a pretty healthy debt market right now in Mexico for, you know, peso denominated debt. You know, if you have a peso PPA, you know, it's good. It's still more expensive than you would, you know, get in the U.S., but it sort of makes sense.
Mm-hmm. So it sounds like the big lesson about the Mexican solar market is that you should get involved in the Mexican wind market.
Absolutely.
Okay.
Wait, no
You're in the
reason.
wrong industry.
Well, we're running out of time, but I do want to thank all of our panelists for coming up today.
Thank you.